What if the Naira's dramatic rebound is about more than just numbers? What if it exposes the hidden gears of Nigeria's fragile economy? The Naira just rallied to 1,500 Nigerian Nairas per dollar, and experts say Forex reserves are the backbone of this surprise turn. Could this be the turning point? The official exchange rate of the Naira against the US dollar has strengthened to about 1,500.91 $1. This rally is being credited to a sustained increase in Nigeria's foreign exchange reserves, which have reportedly risen to around $41.5 billion US. The improved Forex liquidity is also linked to stronger inflows from foreign portfolio investors and recent oil price upticks. What's fueling the resurgence? There are several converging factors behind the Naira's rebound. Forex reserves growth. For 9 consecutive weeks, reserves have increased, suggesting consistent inflow of foreign currency. Foreign investor interest. Because of global shifts, including potential changes in US interest rates and Nigeria's policy reforms, more investors are bringing capital into Nigeria, which boosts demand for Naira. Oil price support and non-oil exports. Higher oil prices plus strengthening non-oil export receipts have contributed positively. Analysts mention that improvements in non-oil exports and a reduction in speculative behaviors in Forex markets are helping. Policy measures. The Central Bank of Nigeria, CBN, appears to be playing a stabilizing role through interventions in the Forex market to address supply-demand gaps. Why this matters? Stakes for Nigerians. These developments aren't just economic trivia, they have real effects. Reprieve for importers and businesses. A stronger Naira means lower costs for businesses that import inputs priced in dollars. This can ripple through to consumer goods. Price stability. With less pressure on the exchange rate, inflationary pressures due to import costs may ease. This could help stabilize prices of fuel, medicine, electronics, and food. Improved investor confidence. Investors hate instability. If this momentum holds, foreign capital inflows could increase, boosting investment into infrastructure or manufacturing. Gap between official and parallel markets. The gap between official rates and black market rates has narrowed, which often signals less speculative hoarding and better trust in the currency. Risks, fragility, and what could go wrong. While this is encouraging, there are risks and things to watch out for. Volatility returns. FX markets are notoriously volatile. If any of the driving forces reverse, oil prices drop, foreign inflows dry up, or policy missteps occur, the Naira could slide again. Dependency on oil. Heavy reliance on oil price. If global oil demand weakens or prices fall, reserves might suffer. Speculative pressure in parallel market. Even with improvements, black market or parallel market rates can diverge sharply if people lose confidence. Policy mismanagement. Poor decisions by monetary or fiscal policy could undercut gains. For example, overspending, misallocation, or delayed reforms could undo progress. What needs to hold if the momentum is to be sustained? For the Naira's rally to have lasting impact, certain conditions must be met. Forex reserve management ensure continued inflows, prudent management, discipline in foreign exchange policy. Diversification of export base boost non-oil exports to reduce dependence on oil, which is volatile globally. Transparent policy and oversight, clear communication from CBN, minimizing market panic and speculation. Inflation control domestic policy to manage consumer price inflation that could negate currency gains. Investor confidence, maintain legal and macro stability to attract and keep foreign capital. Can it be a game changer? Could this rally mark a turning point? If well managed, yes, it could help ease cost of living pressures, lower import costs, and restore faith in monetary governance. It may also give breathing room to private sector businesses and households battered by weak currency, inflation, and hardship. But it's not guaranteed. Momentum must be preserved with good policy, transparency, and macro stability. Where we go from here? Watch upcoming CBN reports and weekly reserve releases. They will show whether growth is sustainable. Track oil prices globally and Nigeria's oil export performance. Monitor non-oil sector receipts and whether reforms enabling exports pay off. Keep an eye on parallel market rates, It's often a leading indicator of confidence or its absence. Final thought. The Naira's rally to $1,500 isn't just a number. It might be a signal. A signal that Nigeria's Forex strategy is working, that investor confidence is creeping back, and perhaps that relief from economic pressure is on the horizon. But unless the conditions around reserves, exports, policy, and market behavior remain supportive, this rally risks being another temporary mirage in Nigeria's long story of currency turbulence.
Thanks for watching. If you enjoyed this update and want to stay informed with fast, reliable news, don't forget to subscribe to Newsflash 360. Hit the notification bell so you never miss a story. Your next headline is just seconds away.